Hi, my name is Rick Bloodworth. This is the Common Sense Christian Financial Channel, and we want to talk today again about the silver market. What I'm going to be talking about in the silver will also apply to a certain extent in the gold market, but I'm going to specify silver because this is an area that I've been investing in and trading in for a little over 40 years now. As a matter of fact, closer to 45 years now. And so it's something that I've got some experience in. I've been doing it in a lot of different ways. I've had some successes and I've had some failures. And so I wanted to talk a little bit about the condition of the market today and maybe some strategies that we can use to take advantage of it. Obviously, your situation is going to be different than the person next to you or the person across the street from you. So this can't be investment advice because I don't know what your circumstance is, but it is going to be a strategy, and it will hopefully give you some ideas as far as how to maybe form your own strategy to where that you can make it work the best for your particular situation. So let's go ahead and talk about the market today. In the last probably couple of months, silver finally broke $40 an ounce for the first time in over a decade. And since that time, it's been steadily progressing up. It's had some dips, but for the most part, it's just been going up to the point where it actually reached $54 an ounce a little over a week ago. And then at that point, it started taking profit, started selling off a little bit. I think it sold down somewhere to about $47, $48, somewhere in that range. And so there certainly is volatility within the precious metals market, but if you know that going into it, it's going to help you to be able to accept the ups and downs of the silver market and also hopefully come up with some strategies of your own to where you might be able to take advantage of these ups and downs. If a market just stayed the same, there wouldn't really be any reason to invest in it. But silver does go up and down, and silver sometimes goes up and down much quicker than gold or other investments will. Now, I heard years and years ago from somebody who had been in the silver market a long time that silver takes the stairs up, but it takes the elevator down. In other words, sometimes it goes down in a hurry. You've got to know that before you start investing in silver. But perhaps you have a lot of experience yourself in this, maybe more than I do, and so you already understand these circumstances and you're more than willing to take that particular risk because you know, again, that it can work to your advantage. Right now, as I talk, today is October the 25th. It's a Saturday. The markets are closed, and silver closed at about $48.54 on Friday, and about $48.24 on the December's futures contract on the COMEX. And a lot of dealers are now starting to use the futures contracts because that's what their wholesalers are using to determine their pricing. And so they're doing the same thing. And so whenever you go in to buy or sell from a dealer, it's very likely that they'll be using one or the other, spot or the futures. Right now, they're probably using the futures contract. It's a little bit lower, but it's not bad right now. A few weeks ago, it was nearly $3 an ounce different, and that made a significant difference on your profit margin, but right now they're pretty close together. And so anyway, we're looking at about $48.54 an ounce on the spot market. It's been as high as $54 and some change for an all-time nominal high. And when I say nominal high, I mean it's not adjusted for inflation. In 1980, the silver market got up to about $49 and some change on a daily basis, but it was just there for a few hours and then it plunged after that. 1980 is really not a good peg for people to be looking at when they're investing in gold or silver because it was very much manipulated upward in an attempt by the Hunt brothers to corner the silver market. And so it was a very unusual situation. It was not a natural rise in the silver market. And so probably not a really good point of comparison other than the fact that we've actually reached that high and gone over it a little bit nominally. But if it was adjusted for inflation, well, inflation's probably gone up to the point now where the $50 market would probably be somewhere closer to $150 to $250 in today's dollars, depending on which inflation measure that you're using on that. And so again, 1980 is not a good example. The year 2011, 2012, probably much better. Nearly reached $50 an ounce during that time. And since that time, we've had quite a bit of inflation. A nominal price today would not be reflective of what the market was in 2012. You'd be looking at something much closer to $75 or $80 an ounce, again, depending on what inflation adjustments that you prefer to use on that. But having said that, silver and gold have been very hot of late. And in the silver market, it is particularly interesting because not only did it get over $40 an ounce, but for the first time in history, it stayed there for more than a month. And that's significant in a lot of different ways. But it does show that there's something of a base being formed, whether it's temporary or permanent, nobody knows, time will tell. But again, it's a little bit different, I believe a little bit more encouraging, at least to me, from the other markets that I've witnessed through these 45 years of investing that I've done in the silver market. And so now I want to talk to you about when to take profit. There are some people who use silver as a savings account. I do that myself. And in the savings portion of my account, I try never to touch that. There might come a point where I'm desperate for funds and I have to do that, and that's what savings is for. In part is to take care of unexpected emergencies. But it also can serve as a legacy account. It's something that you can leave to your children. My father-in-law died at the age of about 92 years old, and he had accumulated quite a bit of silver through the years at a pretty good price, and so he left all four of his children a fairly nice little chunk of silver when he passed away. It was a legacy that he was able to pass on. He also passed on some gold at that time, as well as some other assets that he and my mother-in-law had accumulated through the years. But the point is that silver is very nicely used as a legacy account for future generations. And so this may be part of your motivation for saving in silver. I like saving in silver because it always seems to hold its value, and sometimes it does much more than just keeping up with inflation, such as today. It's making a nice profit if you've purchased it in the last year or two. And so I want to talk about that. I want to talk about what we do with the investment portion of our silver account. My recommendation is this: take about 75% of everything that you purchase and just set it aside for savings. Don't ever touch that unless you have to. There might come a point where you have an investment opportunity, maybe a piece of real estate that you've just longed to buy. Maybe this is the reason you're saving this silver in the first place, and now the opportunity comes up. Well, by all means, use it for what you'd intended to use it for in the first place. But if you don't have to touch your savings, don't touch your savings. The investment portion, I like to keep it about 25% of my total holdings, and that way when the market goes up, I can sell anything up to that 25% mark, and then if it starts going down again, I can reinvest it at a lower price. And so that investment account is something actually that can be used to magnify your profits. Savings are just going to sit there. If you have 100 ounces of silver 10 years ago, you still got 100 ounces of silver today. It hasn't changed. What you can get for it in dollars has changed, but what you can buy for that same 100 ounces today as you could maybe 20 years ago might be roughly the same. And so silver doesn't change, only the dollar or whatever currency you're measuring the silver in is what's going to change. Let's again talk about this investment. I want to give you a hypothetical situation, but it's also one that uses real numbers, and we're going to look at the last 5 years. So let's suppose that 5 years ago you decided to start saving about $400 or $500 a month of your paycheck and just putting it into silver. If you took $400 a month, the average price of silver over this last 5 years has been roughly $25 an ounce of what you could have actually purchased it for. Some of that time it was below $20 an ounce. In the last year it's been primarily above $30 an ounce. So obviously in the months that it was below $20 an ounce, you could buy more for that $400 you'd set aside than you could now. But on average, about $25 an ounce. And so over a 5-year period, doing that each month, dollar cost averaging, you would have accumulated about 960 ounces. Let's say you went out and bought $1,000 more of silver at some point. That rounds it up to an even 1,000 ounces of silver that you have. That's something that you accumulated over a period of 5 years, month by month, dollar cost averaging, at the average cost of $25 an ounce, which is about the average cost that silver would have cost you over the past 5 years. Now, you take 75% of that and you just put it into savings. This is something you do not intend to sell unless you have to, or unless you have an opportunity that comes up that's just too good to be true. Well, you've got the funds now. You've got an investment that you can take advantage of that opportunity. You're going to find in your lifetime that there will be very real opportunities that come up, not very frequently, but they will come up. I'm not talking about pie-in-the-sky investments where somebody's giving you a get-rich-quick scheme, but something that you are familiar with, something that you've educated yourself in. So maybe you live in a particular locality that's near a lake, and you've been looking at lake property for a long time. You know what the value of the lake property is, and now, for whatever reason, you have an opportunity to invest in one of those properties at a reduced price, but it's a limited opportunity. But now you've got savings, and you know what you're doing. You have the savings for that purpose. Take advantage of that if you want to. But otherwise, just hold on, hang on to your savings, and after the 5 years, the 1,000 ounce accumulation, you've got 750 ounces that are designated for savings. You don't intend to touch that. You're holding this. It's for savings, for a rainy day account, for a legacy, whatever those savings are for. Now, the investment account is probably what's going to interest most people. You've got about 250 ounces in your investment account. And silver has just kind of gone up a little bit. All of a sudden, before you know it, silver was over $54 an ounce. And you wanted to take advantage of that. And so you sold either all or a portion. I prefer to sell just a portion at a time as the market's going up. But let's say that you sold that 250 ounces at $50 an ounce. Well, it cost you $6,250 because your average cost was $25 an ounce. So you've sold it for $12,500. You've literally doubled your money in 5 years. Well, you're going to have to pay tax on the profit on that. And so let's say you're in a 20% capital gains or 20% income tax bracket. And so your taxes on that are going to be about $1,500. You've made $4,750 free and clear now of your original investment. Or you've got, for what you put $6,250 into, you've now got $11,000 after taxes. And since this is the Common Sense Christian channel, I would recommend that you give a portion of that to God. I'm not going to give you a percentage or an amount. That's between you and God. But if you're a Christian, you're certainly going to want to give the first fruits to God, and so you take care of that in whatever way you want to. But now you've got a significant amount of money over your original investment. Again, I mentioned it was at $54 an ounce just last week. Now it's at about $48.50 an ounce. It's already starting to go down. You may want to start buying back some of that silver as it does go down so that you can take advantage now. You've locked your profit in, and now you're starting to buy it back at a lower cost. And so this is what you have an investment account for. Maybe you want to take that profit from that and you see another investment opportunity that you're confident in. Or maybe you want to speculate some in something like Bitcoin or the stock market or real estate, whatever it is that you like, that you have educated yourself in. Now you have the funds to do that because you've taken a profit and you can invest that profit back in. All this time, continue to dollar cost average in each month at your whatever your rate is. If you're putting aside $400 a month, do that. Obviously, that $400 a month isn't going to buy as much today as it would have 5 years ago. But the beauty of dollar cost averaging is you take advantage not only of the dips that will come up, but advantage of time as well. You're doing it slowly, but slow will eventually add up. In this silver accumulation phase that you had, you're only investing in about 16 ounces of silver a month. But after 5 years, you've got 1,000 ounces of silver, and that is something that certainly is a good savings and investment account. It gives you a basis to start with. Now, let me say something else. To those of you who are absolutely convinced that it's foolish to ever sell your precious metals, you would never have a portion of it for an investment account, that's fine. My encouragement to you, though, is to not make it an idol. If you're just saving it to make a bigger and bigger silver idol, you're fooling yourself. You're going to die someday, and then who's going to get that? Hopefully your children and people that you want to get it, but maybe you're not very confident that your children are going to use it wisely. They may actually use it to their detriment. And so, again, if you're just accumulating it to get more and more and more, you have kind of a miserly attitude towards it. As a Christian, we need to understand that everything we own is God's in the first place. And so part of our stewardship is to use our resources as wisely as we can. Part of that is going to be deciding what to do with the excess of what you have. After you've given of your means back to a worthy cause, after you have paid your taxes and you have excess, what will you do with that? That's part of stewardship, and you need to make a prayerful attempt, I believe, to use it wisely. But if you'll do that, you're going to find that this is something that can be quite satisfying. It is a comfort to me and my wife to be able to do this. I've mentioned before that we were able to retire a few years earlier because of using these strategies, and they've allowed us to do things that we've always wanted to do. There may be something that you would like to do that you realize Social Security alone is just not going to cut it. You may not have a pension of any sort. So this isn't a bad vehicle, from my experience, to use as a savings to be able to supplement your income when you get to that point. And then maybe before you're too old to enjoy it, you can start enjoying some of these things. My wife and I just flew out to the West Coast and enjoyed a week there. It's something we don't do very often. I was a preacher after all, but it's still something that we can do because we were as prudent as we could be with some of the funds that we had. I believe that silver is a great way to be prudent with that. This is just one investment strategy or one saving strategy that you might want to consider. If you're good with math, you can play with the numbers. You can see the possibilities, hopefully, for your situation, and then you can do the best as far as what appears to you to be the wisest with the funds that you do have available. Silver is a market that is very volatile. I would caution you not to fall in love with it. I would caution you not to get emotionally invested in it. I've been watching people recently post on YouTube who are absolutely angry. They've got more value now in silver than they ever have before, but for some reason for them, it's just not enough. Either they think their dealer is taking too much of a profit. Sometimes they do find you a good coin shop or a good investment broker to go through. but usually they're just taking a fair margin for themselves. That allows them to keep the doors open and to provide you the material that you want to invest into. So don't get mad about it, and don't become so emotional that it becomes a roller coaster for you, where you just get exhilarated going up and depressed going down. This is the sign of a habitual gambler, and you don't want to do that. If you want to speculate, do it in some other area. But if you want to invest, if you want to save, this is not a bad way to do it. Just don't get too caught up in the highs and the lows of it all. Slow and steady really does win the race in most instances, and this is one of those cases I believe you'll find, as I have found, that type of approach really does work. But if you can keep your emotions out of it as best you can, if you can keep from getting too greedy with it or too fearful with it, but just use it from an intellectual standpoint, this is my savings, this is my investment, this is what I'll do with it, I believe you're going to enjoy the fruits of a prudent investment. But if you're looking for something that's just going to shoot to the moon, well, get into Bitcoin if that's what you want to do. Go to Vegas if that's what you want to do. I wouldn't recommend it, but you can at least get it out of your system quicker than you could if you're looking for a prudent investment. But if you are, this is one way to do it. Other ways will work for you. Just really look into it and see what does work best for you. Well, I hope this video helps. This is something that I've done for a long time. Again, slow and steady wins the race. When it goes down, you can take advantage of that by accumulating more. Just make sure you're doing it for the right reason. Well, that's the video for today. Let me know what you think on this. I do appreciate your watching, and we'll see you again next time.